Hello viewers, so welcome to my channel. I am Hasham Ali Khan. Now I am going to start the second unit of GST, Theory and Practice of GST subject. Already in the first unit I have explained you the complete details regarding the origin and the meaning of GST and different aspects regarding registration, cancellation, all those things I have already explained. I have covered up in the first unit. Now in this unit, in this second unit, I am going to start the next topic called Getting Started with GST for Goods. So how to record the transactions according to the provisions of GST. That's what I'm going to explain you. In this video, I'm going to explain you three topics. The first topic regarding intrastate supply of goods and services. Second, interstate supply of goods and services. And thirdly, return of goods. So these three topics I'm going to explain you in this video. So watch the video till the end to get the complete command. So before starting the video, take the screenshot of the points which I have written, then I'll explain. Now, first of all, getting started with GST goods. This is the heading for unit number 2. So first of all, intrastate supply of goods. Intrastate supply. Actually, intra. The meaning of intra is within. Within the same state. That means the supplier as well as the recipient belong to the same state or the same union territory. UT. So if both the supplier and recipient belongs to the same state or same union territory, it is called intrastate supply of goods and services. So here it refers to the transaction in which the supplier of the goods and the recipient of the goods belong to the same state or union territory. Just now I told. Now the transaction takes place within the state. In simple words, we can say the selling and purchasing both are done within the same state or within the same union territory. That is called intrastate supply of goods and services. Now, intrastate supply of goods and services would be divided into two types. Now, this intrastate supply are again divided into two types. That is, first one, the intrastate inward supply of goods and services. Remember the word inward. The intrastate inward supply of goods and services. Secondly, intrastate outward supply of goods and services. So we have inward as well as outward within the same state. So intrastate inward and intrastate outward supply of goods and services. Now the inward supply. The inward supply of goods and services are recorded by using purchase voucher. So inward, intrastate inward supply of goods and services will be recorded in purchase by using purchase voucher. So two vouchers are there, purchase voucher and sales voucher. The purchase voucher will be used for recording intrastate inward invoice. Intrastate inward supply of goods and services. Whereas intrastate outward supply of goods and services will be recorded in sales voucher. Simply inward purchase voucher, outward sales voucher. That you have to remember regarding intrastate. This question will be asked in short questions for 4 marks like that. What is intrastate supply of goods? Similarly, interstate, it is exactly opposite to intrastate. Intra means within the same state. Interstate means between two or more different states. Two or more different states. That is called interstate supply of goods. Example, one supplier belongs to one state and recipient belongs to another state. So two different states are there. Then it will be called interstate supply of goods and services. It refers to the transaction in which the location of the supplier of the goods is different from the location of the recipient of the good. Two different states. Now, example, Sam and Company is a trader registered in Karnataka. So Sam Company is a registered person under GST in the state of Karnataka, and when the company supplies goods to a recipient trader in Rajasthan. So two different states are there, Karnataka and Rajasthan. Sam and Company is the registered person in Karnataka. He is supplying the goods to a recipient. The recipient belongs to Rajasthan. So two different states. It is called interstate supply of goods. Then it is said to be interstate supply of goods. Integrated tax is applicable in case of interstate supply of goods. I told you in the previous first video, three types of GST are there: CGST, SGST, IGST. CGST and SGST will apply for intrastate. Intrastate, within the same state we apply CGST, SGST. Whereas if it is interstate of supply of goods and services, we apply IGST, integrated GST will be applied. The interstate supply of goods and services will be divided into two types, just like the intrastate. Just like intrastate, in interstate also we can divide it into two types. The first one is interstate inward supply of goods and services. Secondly, interstate outward supply of goods and services. So simply the difference is here inward, here outward. For purchases we use inward. For sales we use outward. That is the difference. So not much difference between intrastate and interstate. Within the same state, intra. Between different states, it is inter. Here CGST, SGST will be applied. Here IGST will be applied. But here two types are same. Here interstate inward supply of goods and services and interstate outward supply of goods and services. The inward supply of goods and services are recorded in the purchase voucher, and the outward supply of goods and services are recorded in the sales voucher, exactly similar to the intra. So almost provisions are same. Similarity is there, but differences are also there between intra and interstate. Now the next topic I am going to explain you about in this video is return of goods. Many a time the recipient of the goods will return back the goods to the supplier due to number of reasons. Due to different reasons, the recipient of goods will return back the goods to the supplier. That is called return of goods. So return of goods refer to return by the recipient of the goods to the supplier for various reasons. The goods are returned to supplier by customer due to damaged product or wrong product or any other reason. Suppose if damaged goods are supplied by supplier to the recipient will return back. Similarly, if a wrong product is supplied by the supplier to the recipient will return back, or any other similar reasons are there due to which the recipient will return back the goods to the supplier. Tax liability is charged for such returns under GST. So again, tax impact will be there on returns also. Based upon the nature of the transaction, the return of goods are of two types. So two types of returns are there. It's normal one, purchase return and sales return. Following are the provisions relating to handling of tax liability and recording returns of supplies under GST law. So under GST law, what are the provisions regarding the returns? Regarding the purchase return and sales return, how it will be recorded and how the tax liability will be handled on returns. That point we are going to discuss. If the goods are returned by the recipient within 6 months from the date of purchase, then the tax payable is equal to the input tax credit availed on the inward supply of goods. So if the goods are returned by the recipient within 6 months, from the date of supply, then the tax rate applied is the input tax credit. The input tax credit rate will be applied if the goods are returned within 6 months. If the goods are returned after 6 months, then if the supply of goods are returned after 6 months from the date of purchase, the tax payable will be equal to the tax rate as on the date of return. So as on the date of return, what is the tax rate? At this tax rate, it will be adjusted for returns if it is returned after 6 months. These are the provisions of GST law for returns. Now, debit note. Debit note is used to record the purchase return, and credit note will be used to record the sales return. It is a normal procedure. In accounting also we'll do the same thing. Debit note will be raised for purchase return and credit note will be raised for sales return. Now, purchase return, specifically separately I have given how it will be treated according to GST law. It refers to the returning of goods by the company to the supplier of goods. Purchase return is the return of goods by the recipient of the goods to the supplier of the goods. The company may return the goods either to damaged product or wrong product. Purchase returns are recorded in debit note. I told you the purchase returns will be recorded in the debit note in Tally ERP 9. When accounts are maintained on Tally ERP 9, there's a drop down option available called debit note. In that debit note, we are going to record the purchase return in Tally ERP 9. Similarly, sales return. The sales return to the returning goods to the company by the recipient of the goods or by the customer. The customer will return back the goods to the supplier. That is called the sales return. The goods may be returned on account of damaged product or account of wrong product, and the sales returns are recorded in credit note in Tally ERP 9. Again, in the Tally ERP 9, if you are using, then go to the option of credit note. In that option, you are going to record the transaction of sales return. That's it. So in this video, I have explained you three topics. First one, intrastate supply of goods and services. Secondly, interstate supply of goods and services. Thirdly, I explained you about return of goods, that is purchase return and sales return. Inshallah, we'll continue the next topic in the next video.